Let's talk a bit more about the data this morning in the market with Mona Mahajan. Edward Jones, head of investment strategy, joins us here at Post 9. Always good to see you.
Great
Welcome.
to be here.
Happy holidays. You think there's time for a rally to show up before year end?
You know, look, Santa Claus came a little bit to town this morning. We enjoyed seeing that CPI print come in well below expectations. What particularly caught our eye was the core CPI reading. Nice to see 2.6%. You know, keep in mind, 2/3 of the basket is core and services. And if that trend does continue, inflation was one of our risks for 2026, and hopefully that's moderating. I'd say, you know, 73% of the time the data shows since 1980, we have seen a Santa Claus rally between last 5 trading days of the year, first 2 trading days of 2026. Could we get it again? Absolutely. We're in this period where markets have moved a bit sideways, and so maybe we do see a year-end push. But more broadly, we feel pretty comfortable going into 2026 with the economic and earnings backdrop.
Have you established earnings or indices targets?
You know, we don't do targets per se, but we will say we know S&P returns are driven by 2 factors: earnings growth and valuation expansion. We do see earnings growth double digits next year. The scope for valuation expansion a little bit limited, especially in the tech and growth parts of the market. But could we get some catch up in parts of the market that are outside, you know, Mag 7, 493? We think there is scope for that. So there is a base case of positive returns for 2026.
You think that is most evident in, or continues to be most evident in banks or healthcare or transports? I mean, there's been a few.
There certainly has. And all those sectors you named are good ones. We particularly like healthcare and industrials here. We remain overweight going into 2026. We also actually still like consumer discretionary. We think there's some valuation potential there as well. But more broadly, the theme is let's get some non-tech and growth in the baskets for 2026.
Actually, to your point on discretionary, that's the leading sector today. And I wonder if you think it has to do, there's some desk notes today about what a stimulus check would be spent on, what income cohort would benefit the most.
Yeah, I think all of the above. You know, look, we're in an environment where the Fed is lowering interest rates. That's a good backdrop for the consumer overall, especially if we see that 10-year start to stabilize and maybe impact mortgage rates overall. But we think generally the middle and high income consumer is holding in there, and that's what really drives the economy overall.